Okay, so CADJPY was a pair that I took this week. If you remember from my breakdown video, then you remember that CADJPY was definitely on the watch list. As you see, it's right here to the side. And I was just looking to take this to the upside for buys right here at this area of interest. And we got a pretty good entry, in my opinion. So I just wanted to break that down with you guys and let you know exactly what I was looking for, show you exactly what happened and why I got in, my stop loss. I could go over area of interest again on how I found it. But if you haven't watched that video, be sure to check that video out because I do go a little bit more into depth about area of interest. And I promise you, I've been getting a lot of DMs about area of interest and stuff. Once you understand it, it's the easiest thing. You'll be able to spot them left and right. But the key is you have to practice. You have to, here on the weekends, on Saturday or Sunday, go on this chart, look up areas of interest, look for multiple touches of support and resistance where price bounced off of or respected. Then you go to another chart, do the same exact thing. Then you go to another chart, do the same exact thing. It's just repetition. Once you get that repetition in and that chart time in, then you'll be able to understand it. So if you're struggling with areas of interest, go ahead and give that a try. But first, thank you guys so much for 1,000 subscribers. I think we're sitting at 1,150 or 55 or something like that. And it's honestly a blessing. I really do appreciate all the subscribes, all the likes, all the comments, and the engagement. I really do appreciate that. Now, my goal is to hit 100K. I want that 100K YouTube plaque. I think once I get that, I'll be set with YouTube. I feel like that's the only thing that I really wanted. But I really do appreciate all the engagement, man. I mean that from the bottom of my heart. This is the road to 100K. So let's go ahead and keep running it up. So CADJPY, let's jump to the weekly. As you remember from the breakdown, we were bullish. How do we know that we were bullish? Because if we set these lines up, we know that this was the lower low, this was the lower high, and the moment that price closed above, then we just move these lines. This becomes a higher high, this is now the higher low. So now on the weekly, we're bullish. This area of interest that I have marked up is a daily area of interest. So we'll jump down to the daily and I'll show you that. As you see, we have one touch here, another one here, another one here, another touch, and more touches throughout. The area of interest, as I mentioned in the intro, is just multiple touches of where you see price respected the level, whether it be support, whether it be resistance. You see how this is support. What was I looking for? Price to go to the upside. You see how over here, this is resistance. Came back, pushed down. Then when we finally broke above, came back to this level, pushed up. You could count that if you want. Pushed up. So I'm seeing that. And I'm noticing, okay, this is a valid area where price has came back to respect it as support in the past and as resistance. So when it comes back into this area, since price is above, I'm looking for it to come down and respect it again as support. It's super simple. Area of interest. I promise you, when you really understand it, you're going to be like, damn, why did this take me so long to understand? But I get it. You got to train your eyes, right? And all that takes is time. So we have our area of interest marked up. The weekly is bullish. The daily is bullish as well. Just using the same strategy, or not strategy, but the same concept that we did for the weekly. Take these lines out. We noticed that in the past, this was a lower low, this was a lower high. The moment price broke above this area, price became bullish. So we just move our lines like that. And again, we're looking for the same thing. Price to retest this area of interest to take us to the upside. Now, since we know that the weekly and the daily are bullish, I'm not worried about what the 4 hour is doing. There's no point, because if we already have the two higher time frames in sync, the 4 hour could be bearish, which in this case it was, because we closed under this level. So this is what we look like before I took the trade. This is what we look like before I took the trade. Price was bullish. And the moment we closed under here, that's when 4 hour became bearish. But again, we're not worried about that because the weekly and the daily are telling us that price is bullish. So that's the thing you got to understand. if the weekly and the daily, I personally love when the weekly and the daily are in sync, because then I don't even have to give the 4 hour any thought. Now, if the weekly is in this case bearish, but the daily is bullish, then I would have to go down to the 4 hour, and I would have to wait for price on the 4 hour to become bullish in order to then look for a trade. I hope that makes sense. And vice versa, if I'm looking for sales, if the weekly is bullish but the daily is bearish and the 4 hour is bullish, then I'm looking for the 4 hour to go bearish before I look for any sales. And if that doesn't happen, then I don't take the trade. I don't even look at the pair. I throw the pair away and I try to find another pair. But now that we know now that we know where our bias is, we jump down to the lower time frames. I took this entry on the 15. That's just what I jumped down to. I mean, I used the 30 and the 1 hour too, but I always usually jump down to the 15 first, because that's usually where the first move happens. But we could check out this 1 hour. As we see here, it's going to be hard to tell, but I'll zoom in. We were bearish coming down. This actually closed below, which that made us bullish. Let me zoom in on the 1 hour so y'all can see. Again, it's going to be hard, but you can definitely tell that this closed lower than these candles right here, right? So now this becomes a new lower low. And then the moment that we break above, wait, before I jump to that, this becomes a lower low. This becomes a lower high. And this is on the 1 hour. The moment that we close above, that means that on the 1 hour, we are now bullish, right? So if I was looking to take it on the 1 hour, then all I would be waiting for is a pullback and engulfing. This, I wouldn't have taken it because I like to see it engulf the whole thing, which is why I didn't take it on the 1 hour. But I was already in it on the 15 because the 15 happened before the 1 hour did. And the same thing here. If we zoom in on the 30, we see that candle closed lower. So it's the same thing I just showed you on the 1 hour. And we're looking for the same thing. Price to close above. You could have taken the entry right here. But I was watching this while I was working, and I noticed this is even more clear in my opinion. And it should be for you too. This is the lower low. This is the lower high. The moment price closed above this area, that's the shift of structure. That's letting us know that the 15-minute is now bullish. What are we waiting on? A pullback, engulfing candle. Once you get that shift of structure, then you shift your lines, wait for the pullback, engulfing. And I've noticed, at least before I get into that, I noticed that sometimes price will go under my area of interest on the 15, which is cool. You know, I'm not worried about it. Now, I don't want to see it all the way under here and then I'm looking for engulfing candles. No, like I want it to be relatively close, or at least want the engulfing candle to be in the area of interest. You know what I mean? And same thing if price, because sometimes price won't come all the way down to the area of interest, and it'll have a shift of structure here and then give you an engulfing here. I personally don't like taking it. I like it when price is trading in the area of interest. Now, if it was something like this, then yeah, then I would consider that, because now we have the engulfing candle, or the pullback retesting the area of interest with the engulfing candle showing us rejection from that area. Cool. I'm in that. Drop stops below, right? But if it's, let me go back. If it's happening up here, to me that's too far. Like, to me, my alert ain't get hit. So I'm still waiting for price to make more moves to the downside. And then once it gets in here, then I'll look for everything that I need, right? But that's me personally. If you don't care about that, take the trade. Again, make sure that the trades that you're taking, you like. So if you like that, take the trade. I just noticed that I don't like that. I'm not as confident in that, which is why I don't take it. Same thing when it's below. I'm not as confident when it's like that. I like it either super close to the area of interest or in the area of interest. So now that I hate when I do that. So now that we notice that we have our engulfing candle, this is the entry. This was at 10:45 a.m. Put my stops below. Let me bring the lines back so I could explain how you do the stop loss. Right? So now we're bullish. I put my stops under here. So that way, and I usually do the wick. So let me do the wick. 43. I'd like to add 5 just to give it more space. 48. And the reason I put it here is so that I know that if price, and I learned this from, Alex and his strategy and his YouTube, if price comes all the way down here and closes under, that means I was completely wrong in the trade. And that means that price is still trying to go bearish. If I was to put it, let's say I put it here, then I'm not giving price enough room to breathe, right? Because price could still come down here, retest this area if it wants to, and then head to the upside. And if I don't give it enough room to breathe, then I don't even know if I'm completely wrong in the trade. Like, I want to get out at a point to where I know I'm completely wrong and price still wants to head to the downside, if that makes sense. So for me, it was around 48. And then I set my take profit on the daily. I always set my take profit on daily levels of structure. Which I had it all the way up here. Now, I do want to talk about this level that it actually respected, because I was watching it throughout the week and I was up like 9K. I didn't tell you how much I made on this one, but I made around like 3,000 something, because on Friday I was not expecting this huge red candle, but it's trading, so it happens. So I was up around 9K at this point, and I was looking at the market as, areas to where price could potentially reject from, and this is the area that popped up. So let me go ahead and mark this up. Oh, wrong one. And how did I know that, or have an idea that, price could react from this area? Because I just looked left. Like, it's very simple. You just have to look left. Right? If we look left, we see another area of interest. How do we know that it's an area of interest? Because we see multiple touches where price has respected this area for support or resistance. We have this touch, 1, 2, big touch. Why do I say it's a big touch? Because you see when price tapped into here, had this big move to the upside. So that's 3 touches right there. Another big touch right here, 4, because price created this big move to the downside after coming into this area. And we see that recently price had broke under this area, came back above, and gave us a big red candle to the downside. So with that being said and seeing all that, excuse me, with that being said and seeing all that, you're going to have to come to the conclusion that, yes, this is a valid area and we could potentially see price respecting it. Now, I saw that, I noticed it. Let me draw the box so we know exactly the area and I don't have to keep the lines. I saw that, I noticed it, but this is where my dilemma came in, because I was thinking, yes, price can respect that, but I don't want to just take profit because it can also break through that. You know what I'm saying? Now, on prop firms, which was, what should have been my thought process, on my prop firm account, when I was up 9K, I should have just took it. Simple as that. Because the goal of a prop firm is to just pass the challenges, pass phase 1, pass phase 2, and then try to, of course, get payouts. So it's not like you're in a rush, but you want to make sure that you're not giving the market the money back that it's giving you. So if I'm up 9K on the prop firm, I got to take that. Got to take that for sure. Now I understand set and forget and doing all that, and I would highly suggest doing that maybe on your live account, because I took this on my live account as well. Oh, and I don't even have where's my EMA? No, that's tripping. I'll put that up later. But I take this on my live account as well. EMA was under here. What's going on with TradingView today? Took that on live account. EMA was around here. So On a live account, I understand, holding it maybe for the week into next week because price could potentially, reject the EMA, come back up, break, close above, do all that good stuff, right? But on the prop firm, if you're on 9K, man, just take that because you don't want to give the market back the money that it's already given you. So that was my little lesson to myself this week. Again, 3K isn't bad. 3K is great. But in terms of prop firm accounts, you want to try to pass it as fast as you can. So when you're up 9K, 8K, 7K, you know what I'm saying? Just go ahead and take those trades. Go ahead and close out. That was my lesson. Now, in Alex's strategy, I also use rejection candles, right? I had a message on Instagram and he was asking me if I use rejection candles because he uses a strategy as well. And I was like, yeah, at first I didn't, but then I was like, no, that makes sense to use it. This, in my opinion, I would count this as a rejection candle, especially on a daily. He was asking me what time frames I use it on. I mentioned the daily specifically, but I'll drop down to the 4 hour to show you guys what I was seeing there as well. So on the daily, you see this wick, which means that price came into the zone and ended up rejecting it. That is rejection, in my opinion. So that's what I considered as rejection. And then on the 4 hour, and this is exactly what I told him. So I went down to the 4 hour and I noticed that when we were here in the zone, we had 3 candles showing us rejection, right? So it doesn't just have to be a wick, in my opinion. It could be price coming down and a big explosion up from this area, price coming down again and showing us a decent sized candle in this area. And so what I was expecting was pretty much the same thing, price to come down and give us another big blue candle from this area. Right? So I would consider that as rejection as well. I would still consider this as a very strong area of interest, and I'll be looking for price to do exactly what it did, which was use it as support to continue to the upside. So that's going to be the trade breakdown of CADJPY that I took this past week. If you enjoyed the video or you learned anything, be sure to drop a like. If you guys are interested in the rest of my journey, be sure to check out my other videos and be on the lookout for the trade setup video for this upcoming week that I'll probably be dropping tomorrow, to be honest, but I'll make the video tonight. But appreciate you guys so much. Be sure to like, comment, subscribe, and thank you so much for the 1,000 followers again. Y'all be safe, man. I'm out.